Is the recording loud and clear? Everything okay? Okay, now start the ball rolling. Don't waste time. Okay, tonight's session is primarily focused on how to trade earnings. Earnings is earnings is unusual in the sense there is to trade earnings. There is so many different strategies to trade earnings, and most of people make the mistake of trying to trade earnings by trying to predict market movement. Today, I will show you the different ways of how to trade earnings. It can be FA, it can be price action volatility trading. It can be option premium volatility trading. I'll explain to you structurally. By the way, this is not theoretical. All these are being tested and proven done trading earnings for longest time. Okay, now. So before for those people who are first time here, my his traders roundtable in 2000 it started from 2002. No, 2002 is it or 2012? No, 2014 help. I think we started in 2010. Yeah, 2010. So the primary mission is a community of traders investors. The mission to empower and enlighten people to be successful in creating, enhancing, protecting wealth. It can be protecting wealth. By right, this is the old one. Maybe I think going forward, I might change it to protecting wealth first because most of you are losing too much money for you to survive. In my typical class, my job is to empower you in such a way that you can lose 5, 10, 15 trades and continue trading. Unfortunately, most of the people outside, after losing 5, 10 trades, then financial the trading account got bankrupt already or got margin call already. Anyway, tonight case study only one company only. We'll be looking at Tesla. We'll be looking at around 10 o'clock time frame. We will not look earlier than that. So 10 o'clock, we will focus on one case how to uh, Tesla having earnings. So I will showing some the different ways of trading it. Okay, is my audio loud and clear? Type yes, please. Thanks, yes. Disclaimer needed, gentlemen. Okay. Uh, if you emotionally, financially cannot afford to lose money, or don't want to lose money, or you think the market and you think you must make money because you got some secret formula and things like that, please kindly speak to your financial advisors or other financial or legal advisors for guidance. My philosophy is simple. In order to make money, you prepare to lose money. If you're not prepared to lose money, don't think of making money. So making money, losing money is your own personal responsibility. Okay. Um, so people ask what type trader. I'm the portfolio trader. Means what? I can do intra 5 minutes scalping to 12 months, 1 year, 2 years, long term investing or option trading. So I trade all time frames. What's the best strategy? All strategies are the best strategies. So what's the best shares, futures, CFDs, options? Everything can make money. Ladies and gentlemen, if anything can lose money, that means somebody have somebody have make money. Okay, okay. My style as portfolio means I don't believe in Chinese say wow show hand trading, one horse show trading. Okay, unfortunately, that is not the reality of life. Okay, in trading in markets is not about gambling or sure make money one. No such thing one. Trade financial market is called slow and steady and consistency. Okay. So anyway, I retired in 2002. 2005, I elected founding president of Option Trade Club of Singapore. 2007 non-profit. Then Itchy Fingers go and spend $500,000 to go buy online trading academy franchise. They are quite okay. They are good. They are very systematic. Okay, some of you may love them. The note is very comprehensive. All the back end, front end is very comprehensive, but they are textbook teach. They have their own limitations. They are the business actually way. They are the business that I'm not. So 2009, 2012, 2009, 2010, I start trading around stable again. So you can see I've been doing this actively helping, empowering my fellow traders before 2002 lah. before I left my red race. So today's talk is we're talking about earning cycle. Thomas, earnings you showed me before, sell iron condors yes and no. The last earnings call I did was about 3 years ago or 4 years ago. Should be around 4 years ago. Okay. Okay. So anyway, earnings cycle. So basically, the earnings cycle is a part and parcel of US market. Okay. So this talk will be talking why, when, how, and what. Opportunity and risk. So remember, gentlemen, earnings announcement is considered abnormal event because we do not know what happens, what is the earnings announcement details going to be, and the market reaction to the earnings announcement. This one, unfortunately, I will not be showing this one to you because I was told just now that you all cannot listen to audio, so nothing much. It's an old video I extracted. I used it back in 2013 to show what's the difference between gambling. So, ladies and gentlemen, if you think trading is gambling, please leave now. Trading is never about gambling. Trading in such a way that is gambling simple. Once you place a bet in either red or black, you either live and die or either win or lose. Trading they got so many ways of how to do this to trade the markets. So this one I don't think I want to show it to you because there's no audio. So before we go further, this session I mentioned on there about how to trade earnings volatility. Okay, before we go further, most of you take volatility. IV is volatility, VIX is volatility, net is not volatility lah. Okay, what is volatility? VIX and IV is just a very 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 subset of volatility. Volatility just simply can be anything. Okay, can be what? What is can be simply what? Movement of price over a period of time on a specific underlying. Ladies and gentlemen, I will spend a few minutes on this one, so you hope you understand. What is volatility? Simply a movement of price over a period of time on a specific underlying. Okay, like S&P 500, every day price action volatility now, based on the last standard 10 candles standard deviation is $110 110 points a day. That is known as volatility. Volatility is not referring to directionality. Volatility is referring to the movement of range. It can be high, it can be low. It can be applied to almost every damn thing here. Ladies and gentlemen, you can see here now. You can see this candlesticks here now. This is a 1 minute. This is a 5 minute. This is a 5 minute candlesticks. You can see here now. This one is what? How many pips here? One big candle bar. Hey, Thomas, it's ultra bar. What got to do with earnings? Yes, ultra is ultra. Ultra bar is a subset of. It's a continuation of earning cycle. I'll explain more later to you. Anybody don't understand what is volatility is? ATR is considered a volatility indicator, a volatility number. I would say it's wrong. It's not indicator. It's a definitive number. If the average price movement for the high and low range is given a definitive number, it's not indicator. Anybody got any question regarding volatility? Type yes or no. Especially the public. No, volume is not. For me, volume is not a good idea because volume do not give dollar value. Price is cleaner, Paul. Price is cleaner. You tell me lah. So the price leading because why? Hey Thomas, 50 million, 50 million of shares. Excuse me, of what? 5 cent shares or 1,000 shares? $1,000 shares. Yeah. So price is we are traders. We don't trade on volume. We don't make money on volume, ladies and gentlemen. We make money on what? Dollars and cents. Okay? Yes, you can use volume as you can measure volume volatility. Okay, but do not serve much use to us at our retail level, Paul, because why? We our money don't come from the volume. Our money come from where? Dollars and cents. Okay. Anybody other questions? Especially the public members. Any public here, please, please, public management, do not be shy, Peter, to ask, because most of you here are my students, like Roy lah, like T lah, like Vivian lah, Young lah, all these are my students. Paul lah, Neil lah, all are students. I think Mac is one of my students also. I think, yeah. Okay, all these are not new students. All these quite number of old timers. Some of them are students with me like seven. These are old timer students here. Okay, 8 9 years already. Now, next. So, let me see. Something is not right. Give me a minute. I need to do something first. This is important. Navy and height. I give you a bonus. Let me show you what is reality about. Come. Now, before we go further, there are two most common type of measurements I use. The first one is option premium volatility. This one, not many people do use it. Okay. The most of the time people use market volatility. Oh, Thomas, the ATR say every day move $25. The standard deviation or the Bollinger Band show this number. This is what I call a thing like standard Bollinger Band ATR lah, all the standard deviation all are indicative what give a market volatility numbers. Understand what I'm saying? Okay, everybody? So easy. Look at ATR. Here's ATR. Standard deviation. Yes, Thomas. Standard deviation got 8 there. And 10 there. Got what? Should I measure the high, the low, everything? All are valid. It's how you understand the information and apply it in the market. Remember, statistics is as good as a user. Okay? If people statistics is a lie, the damn lie is referring to user. You believe you believe into it. So you apply it. Because end of the day, whatever I do now is always based on what? Dollars and cents. Tonight's session I'll be touching on as hopefully not too much because my student will have it. It's maybe option premium volatility. Every options, every strike price, every expiry have option pricing. The volatility is referring to the price. It's very, very, very accurate. When you measure chart patterns, you're measuring generalization. Options is very precise. Because why, Thomas, I buy a 120 call on Google on 60 days. All these are measurable. Okay? So options option premium is what we call future forward looking or future tense. Because why? Options for 60 days okay, must based on one underlying time frame. And that's at 60 days, what's the strike price? 120 call. That means that the buyers and sellers of options must calculate what you call the future pricing deliverable. Because if you hold options, hold a call options until 31st of December this year, the sellers must calculate must able to price the movement for 31st of December. So if everybody agreed that Google can go up to $500 by 31st of December, gentlemen, the options for the 120 call will not be $10 $15. It'll be $100 $200 $300 $400 already. Why? Because everybody know, everybody believe Google can go up to $500 by next 30 days. So everybody must price accordingly. Understand what I say about option premium volatility analysis? Is my explanation clear enough, or what? Or you need me to simplify it, or you need me to slow down? Michael, Johnny, Angie, public member, ladies and gentlemen, don't worry about the rest. All the people who say okay have been following me for years. Okay, for some of them for more than 10 years. Okay, spend thousands of hours of me learning. So it's the public members I worry about. Like Peter. Peter not too bad. Peter is a practitioner trader. I met him in Thailand. Okay. So like people that is it Peter? Is it Peter? Is it yeah? Mm. Is he even back here? Good. Charles. Ah, Charles have theoretical have experience trading is okay lah. Is practitioner trading now. Rina, any question? So strange Alan. Okay, next. Okay, what is earnings before we go further? Earnings. Okay, earnings is official announcement of the coming of a company profitability, performance, futures, from normally for a tricky period of time. US market is every quarterly. Singapore market used to be 1 year. But I think that was this 1 year is about 10, 15 years ago one. So basically it's now going every quarterly. Not many companies do it on the monthly basis. Yearly basis also are quite rare nowadays. Okay. So earnings announcement, they not only tell you how much money you make or lose or whatever it is, but they also will give you forward-looking statement or any changes. Oh, sorry, the 2 quarters ago, the $500 million profit is not there, adjustment. So you understand me now? So the quarterly announcement is what I call pro forma. It's not definitive. So they give announcement, a snapshot announcement, then they can change it 6 months down the road, 3 months down the road, whatever. Okay, then every year they will consolidate everything and send a formal one to the SEC, etc., etc. Singapore government, Singapore side will be SGX. Okay, because the earnings announcement is official statement of company status. Okay, then most of the time, sorry, most of the time, people people have certain expectations or market analysis or how many bullish, how many bearish and things like that. So most of the time, earnings is considered abnormal event. Why? Because it's official statement. Unfortunately, everybody do not know the actual earnings report. If you know the actual earnings results before the actual earnings announcement, okay, then you go and trade on it automatically you will be considered insider trading. That means that you end up getting fined or go to jail or worse. Okay, so whatever information they have, okay, you cannot be. You do not say I know the earnings result. No, no, there's no way. Officially cannot unless you got insider information, and that is legal. So very often because of the uncertainty, they feel some of the especially more popular, more the hot companies are often filled with speculations. So speculations, okay, so the people what they do? Speculations often influence option pricing. Okay, tonight I will show a couple of examples, but we will normally focus on Tesla. We're focusing on Tesla as a case example, but we will show some other companies examples. So market estimate because very often the analysts analyze Goldman Sachs analyze JP Morgan analyze HSBC analyze so the very often market estimate consensus. So until the earnings announcement come out, okay, then everybody know have official earnings announcement. Then we do not. Then they will know what is their expectations meet their expectations the announcements details meet market expectations If there is a major mismatch in market expectations. Okay, then the shares are okay will cause the shares to abnormal big movements. Okay, this is why I trade. By the way, this type of trading is called ultra trading. It's a subset of my of it's belong to my day trading cards. Anybody any questions? Anybody any questions? Thanks, Bitin. So earning season happen where? Normally earning season every earning season is they don't start on September. December, March, June, September. They end the earning season end on September. So normally what happens is once the end of September, right? October, a few weeks after the end of each quarter, they will do the pro forma. I call the pro forma. I'll call it estimate earnings whatever earnings details sent out to you all. Okay, so now this now today is the start of the earnings season. You can call it that way. Okay, it's called called that way. Okay. Mm. So basically, earnings every 3 months. Okay, Thomas, danger opportunities. Excuse me, both lah. If somebody can lose money, then ask yourself, the loser's money go to who? To the winner lah. So this one is what? This one is just I mentioned my one. This one is a snapshot from when? This one is a snapshot from April 2019. Okay, 2019. Sorry, I need to change the date later. Can you see it now, my friend? Is the thing, is it audio? Is it okay? Okay? Can you see it now? Correct? Then, gentlemen, I'll show you. Here is the one for which week? This one is the one for this week. 17, 17 of what? 17 of what? 17 October. 17 October. Can you see here lah? Can you see our friend here lah? Tesla. Sorry. You see Tesla here lah. Next fix. Can you see here lah? Then can you see Snap here lah. American Express. Okay. Then tonight we got interact Charles Schwab's after announcement. Somebody NG find for me Charles Schwab exact details. CR something, right? Check for me. Let's see what the performance like. So these are earnings. By the way, this is not all the earnings numbers. This is just a snapshot only. Today earnings week earnings if I'm not wrong right into hundreds of earnings. Okay. So Thomas, sure not. Look carefully. If I go back here, also the same can you see here now? Tesla, Snap, can you see now? Okay, you can see so they got. By the way, it doesn't mean every 3 months confirm they have the right to adjust it but most of the time it's always around there one Anybody any questions? Yes, I giving this you to wait free. This is this website called Earning Whisper. Go ahead. They are quite good. Yes, the data they give to you are delayed. They don't give you definitive. They don't give you definitive stuff. And this is the easiest way to see earnings but not the best Questions, anybody? Am I talking? How is my my voice? Is it clear and clear and visual? Clear and clear. I don't know. We can check it later. They got 5 different ways. They got 5 different websites. They got 5 different ways to go and check the earnings announcement. I just show you the easiest one. You want me to take a look at Apple? I have no problem with that. No. Sorry, this is young Christina or old Christina? No. Wait. You're talking about earnings. Wait. Sorry, I don't understand what you say. I need to check. Company earnings. Talking about trading methodology, or talking about company earnings report? Different. I will show you some day. Why don't we discuss it later? Okay, my upcoming class will be focus something you all can do. I got methodology that I as much I want to. I love to teach you all. Unfortunately, I don't think I can. Not because I don't want to, because I scared that my concern is not so much of me teaching it. Okay, okay. I'm more concerned of your what you call you losing control. Because these are some old examples why earnings is so dangerous. This why I extracted for the what year? This why I extracted from 2014. You can see every earnings gaps. So whether is it 2014 or 2022 or 2023, okay, as long the market got liquidity, got what you call got hot companies, trust me, they got gaps. This is one of the website available. One thing go is free. Okay. Yeah, another one. Okay, this company no more already. Okay, got taken over. Okay. I make good money for this, okay? You see now, so gap every time okay, see what how you know it's earnings announcement? You see here now. You see the dollar sign and the phone? Please learn to recognize one. Thanks Paul for sharing. You see here now. This is earnings announcement date. All your TD Ameritrade or Interactive Broker or whatever should have this logo inside. If don't have, please go and check your settings. Make sure you have it inside. Remember, earnings is the most dangerous things available. You see it can be good things and bad things. Thomas, that's how you sell iron condors. Excuse me. The problem is not selling income iron condors. It's not income volatility trade. There are so many ways of trading income volatility trades. You think the market don't expect the thing to move big? I don't know. So Thomas, how we use it very simple. I use option premium volatility option pricing as a leading what you call as a leading indicator of structuring trades for this what you call for the earnings volatility trading. Christina, what I say lah? I'm using option premium to structure earnings volatility trade. So basically, I don't use Greeks. Greeks, yeah, can but between Greeks data, Veta, and option pricing, which are more reliable, which are more accurate, which are more precise, you all should know, okay? Especially you all follow me for so long already. So how to trade earnings? We can trade earnings in 3 different ways. Okay, 1, shares and CFDs. 2, options. Options can be open risk and fixed risk. Shares. Then we got shares plus options. So most of the time in tonight sessions, we are primary. We have a primary for tonight live market sessions. I'll be focusing options only. Not because I cannot teach you shares or CFDs, but the problem with shares and CFDs you have capital risk, and earnings can be a hero, or you can be a winning hero, or can be a dead hero. And especially for beginners and people who don't have the skill and competency or account don't have skill and competency who don't have the account size competency, then I don't think it's a good idea to trade shares or CFDs through earning cycle. By the way, before you go further, there are 3 different cycles of trading earnings. 3 different cycles of trading earnings, okay? 3 different ways to trade earnings. Okay, I'll explain to you more later. Ladies and gentlemen, I explain to you now what I teaching people back in 2014. In fact, 2020, 2019 also never teach. Before we go further, how to trade earnings? We can trade earnings based on three different analysis. One, fundamental analysis. It means that, oh, Thomas, based on the last four earnings, I expect the earnings to, expect the earnings to do this. I expect earning number to this way. Therefore, the market must go up. The shares must go up. This is what I call fundamental analysis, or what I call fundamental analysis, also not I call historical analysis. Unfortunately, not suitable for us, not suitable for us traders. I repeat, FA is not suitable for trading. Okay, why? Because you see, ladies and gentlemen, what is our duration of time frame? Of course, if you want to go for bottom fishing lah, or value investing lah, or what we call overpriced, underpriced then fundamentals will come to pay lah. But most of the time, we are not going to base on overpriced, underpriced, whatever it is. We just simply see market, trade market. Anybody got any questions regarding fundamentals? Anybody? Type yes or no, please. So I know that you all can see the same me. Paul, how do I do? Okay lah. Okay, second form of market and what analysis we can use to trade earnings is option premium analysis. This one is most of the time is what we call there's three ways to trade markets, okay, for earnings. This one is called trading to actual earnings announcement. Okay, actual earnings basically, like example, we know this Wednesday, Thursday, Tesla having earning announcement. Then Apple is having earning announcement next Friday. So what we can do, you can open a trade now, hold the trade to after earnings. That is called what you call this. What you call actual earning tradings. We call pre, actual, post earnings. I'll explain to you more later on. Okay. Then the last one is share price action trading. This one is post earnings. So tonight, don't worry too much. I will use back some old slides from 2013 or 14 or whatever to share to you how what's the reality of this one. Any questions? There got three cycles of earning cycle. Okay, they actually all in one. We can start with pre-earnings, then we can go to actual earnings event. Means that tomorrow, Thomas, tomorrow, Las Vegas says tomorrow night, Las Vegas says it's going to earnings announcement. I'm bullish. Fine, open a trade for bullish trade for Las Vegas and earnings announcement tomorrow night. This is what I call trading the actual actual event, actual earnings announcement. Then afterwards, there's what I call post. Means that after the earnings come out, wow, the market big move, big drop, how here. Then for those who see me do ultra trading or post market, what you call pre opening bell trading, this is what we call most of the time happens to be what actual post earnings day trading. Anybody any questions for this? Actually, all three can make money, my friend. Oh, wrong question. Wrong answer. What I mean by most accurate? Remember, pre-earnings, we will get up before the actual earnings announcement. Actual earnings announcement, we open a few days beforehand, we close a few days after the event. Post earnings announcement, we only enter the trade after the earnings announcement. All can make money one, Peter. All of them can make money one. I guarantee you. As long because you can make money, lose money. Remember, every trade you go in, there must be a winner, there must be a loser. You mean come on. Okay, I show you an example. Okay, fair. Okay, I managed to this example, the old example, but it's valid lah. Okay lah. Will that be better? I show you an example. This one, Facebook, pre, actual, post. You'll be okay now. If you want, I explain to you. If not, I don't mind. How? Oh, example lah, but it's valid lah. Because at BR Friday, ladies and gentlemen, I'm getting old and tired. Okay, I have no much drive to go play the market. Several years ago, we can go there, we can do intra-hour. Intra-hour means that we can what's the trading time frame for earnings? Ultra trading. Wow. Last week like that. I think last week non-farm payroll we got one company correct. After some bad earnings correct. Opening bell 9:30 standby, 9:35, 9:40 we enter long shot. After 1 hour, take profit. Same thing for intraday. Then the actual earnings announcement itself can be actually open a trade for this Friday. We are going to open a breakout trade. I think we are bullish on Tesla. We are going to open a breakout quarterly trade for Tesla this Friday night for this earning announcement. Then the trade will be intra week. Then Thomas, I want to go and bottom fishing. Then fine. Then bottom fishing for after during earning cycle. Then fine. Then we can do swing trading. So this one, forget it. I will not be talking too much about it. Long shares, short shares, long options, short options, no, no, no. Actually, because the more I teach, the more I share, the more confused you are. So by nature, it's combination of all. I'm not joking. Combination of all. Okay. My job now, our job now as a trader is to risk less, lose lesser, make more. Pre-earnings trades are open to capture price movement, increase the option premium volatility. Mean you can open. I got in the past. I got strategies that open 2 3 months before, 2 months plus before the actual announcement. But nowadays, we sometimes we're doing short term trade. Maybe now in the last time I do it was now is the intra month. Open a trade before earnings announcement. We take profit. First time is to capture directional movement or market volatility and increase the option premium. Ladies and gentlemen, is earnings announcement, earnings events are considered abnormal. If your company is considered hot company, I mean popular company or volatile companies, then the options are all option pricing must be increased. Because why? Okay, why? Because you can see that, as I showed you earlier just now, every time after an earnings announcement, they may have big market movements. So the buyers of the sales options must increase the option pricing to cover the risk of bad earnings report or good earnings report. Option premium analysis, I teach you already, correct? I think you follow me recently, sure, correct. Hey, stop, where's the earnings coming out? Because the price is too high. Okay? Mm. Okay, now most important is open the trades before the earnings, close the trades before the actual announcement. So if your Tesla is announcing on Wednesday, you got a pre-earnings announcement, by tonight or tomorrow night must close already. Though. Questions? Questions? The actual earnings announcement. Open before the actual announcement, close after the announcement. So basically, we are looking to capture. We are trying to capture what breakout price movement. Wow, we buy a breakout volatility trade. Wow, shoot up all the way. Nothing wrong. Can make good money if you know what you're doing. But the problem is the risk. Then we got if we can do it such a way that also we can open a what you call ranging multi-directional trading. There also another we can what you call earnings volatility income trades. Means that after the because most of the time for hot companies, popular companies like Baidu also can go that way. Google then our friend Amazon and things like that like expensive companies or very popular companies then option premium tend to be expensive. So because why they project it to be volatile, so they have to cover the risk, right? Remember, all options. Why option price is expensive or cheap? Is straightforward. The buyers want to buy cheap, the seller wants to sell expensive. Both of them must calculate the risk to them. So if everybody think Tesla can go by $50 by this Friday night, then after we on our computer, we can see Tesla and the money call and money puts will be $30-$40 each. If everybody think Tesla can move $50. Okay. Anybody any questions? If you look at actual earnings, no difference. Beating no difference. It can be buy, it can be sell. Remember, strategies is just tools for you to achieve your objective. So you can do a breakout trade, can be a buy. A breakout trade can be a sell, you know. That's how you structure it. For your case, beating unless you want the shares buy is better lah. Okay. You see I do not know what you prefer have. For you, you may have short, you may have shares correct. Thomas, I prepared to sell my Tesla shares. If we go above $130, I sell my Tesla share. If the thing drop down to $90, drop to $80, I prepared to buy Tesla shares. Can you're beating yourself say now. Let's say now you got shares, Tesla shares now, but you're prepared to sell Tesla shares at $130. Example wait, how much Tesla share nowadays Okay, I'll make it Google Google is $130 You got Google shares. You're prepared to sell your Google shares at 130, but you're prepared to buy Google shares at 90. Can Can. Sell a call 130 then sell the put at 90 lor. You understand what I say So if the thing shoot up all the way, the short call, short call how? Your shares no what problem? You might remember, not everybody are trading with a 5,000 or 10,000 account. Some of you here, I know got a lot of shares. And account size is definitely $5,000. Can add 2 more zero behind it. I know, some cases, no, more than 3 zero behind it. Okay, now, so if you are prepared to hold it this way, if you are going to prepare to do this way, why not? Sell the 130 put, tell the 130 call for Tesla. No, 130 call for the Google because you have shares. You got shares at $80-$90. You don't mind get call away. Now, on the other hand, if the thing drop below $80, you don't mind buying more shares. So sell one call, sell one put. Beating, understand what I say? Okay? Especially for earnings. Very fat. In the case of Tesla example, Thomas, I not holding Tesla shares now. I think I prepared to sell my Tesla share at $260 call. Nothing wrong. Then I prepared if a Tesla drop to 150, I don't mind buy Tesla share at 150. Nothing wrong. So can you not sell a 150 put and sell a 250 call? Christina, you understand saying now? Alan, Charles? This is by the way, this is what we call for real traders. Of course, for your case, you can't do it because your account size may not be there, but we don't mind. Just telling you, sell or buy beating, like what beating say, is actually dependent on each individual needs and your objective. Okay? By the way, I know my student. Beating is one of my old tutorial student back 7-8 years ago. I know. So I know. Christina is just a young one, is starting with me. So basically, I try to tailor you all. Somebody asked me, Peter was asking me, what the best method? Depend on you. Every method is a winner if you know what to do it, how you use it. Your job is to choose the best method that win your capital exposure. Risk so that is fixed risk of $5,000, $10,000, $50,000, $100,000. I don't care. Then lose less, risk less, lose less, make more. So this is what I call ranging breakout trade. So this is the old one. You can see Sometimes I can see here now. This one called non-event This is big caps So this sort of thing happens a lot. We don't care too much. We are traders. Our job is not to predict market reaction to news. Okay, ladies and gentlemen, let me share to you something Do me a favor Do not take positive earnings or negative earnings as the market must go up or market must go down Sorry Ladies and gentlemen, we don't trade the earnings report. We do not listen. Okay, ladies and gentlemen, we don't trade the earnings numbers. We don't trade what market think. Okay, we don't trade what the market analysis think. We are indeed interested to see market, trade market. We are trading the market reaction to the news. Okay, Peter, understand not? You all think too much. That's why I say you all 伤脑筋. Then people ask me, Thomas, wow, you want see one look, wow, I do so many trades, because I let go everything. I just simply focus on what I can see. I don't think too much. I don't predict too much. By the way, these are some of the methods. We have not discussed yet the duration. Sorry, the expiry. Okay? So BT, you want to do this way? Drop me a message. We discuss it later. What's the objective? What's important? Here is the actual earning announcement. Yeah. So subjective is that straddles. Buy for breakout, sell for range. In this case, sell for shares long shares, short shares are sellable here. Okay. So very long shares depends what you're doing. Thomas, I want to sell for learning. I want to do earnings. I want to do earning trade for sake of learning. Then good, nothing wrong. Then I suggest you do vertical spreads. Is the vertical spread can buy call, buy puts, or do combos. It can be buy, can be sell. Trades this type of actual earning trades trades is always open 24 hours, 72 hours before actual earnings itself, and we don't hold it too long. Okay, we are trading the actual earning announcement itself, so most of the time we hold it in the X number expiry. Now post earnings. Okay, before we go for any questions about actual earnings. Sorry, Christina, talk to me. Attend the class. Remember, this is a public session, Remember, gentlemen, I know 90%. 80-90% of people are my students. That's why. Hey, Sufu, how many days? 24 hours, 48 hours, 72 days. Okay. Okay. To be fair, I don't mind giveaway, but then it's not fair to the rest of y'all who support TRT mission, correct? By paying school fees and things, correct? Thank you. Any question regarding actual earnings? Anybody questions? Charles? Peter? Jeff? John? Philip? Vincent not around today. So this one is a different ball game. Post earnings, after the Tesla earnings come out, after the Charles Schwab whatever come out, few things that happen. If the earnings announcement meet market expectation, correct? Nothing much. They become there's nothing much can happen But if the earnings report the announcement come out with the CEO leaving us or come out or they under investigated by the China government or got legal problems in Europe things like well very often cannot fund when I say an earnings announcement is not only about company performance it's also about company guidance I think the next 2 quarters we will have less business or more business or come out or not only a company not only forward looking guidance also come out, Thomas Ladies and gentlemen, we are currently have been subpoenaed by the American government, blah blah blah, or the European government, EU investigate us for this, or the British government financial service investigate for that. So when that happen, when this gentleman, when any good news or bad news, they must tell. Okay? So when the good news coming out, hey, this is good news, the market never know, don't know one. Oh, come on. Suddenly said Tesla come out, gentlemen, we have received a $100 million special project from the United States government army to create a new generation of battery, what you call environment friendly tanks, what you call electrical vehicle, electrical power tanks. Good news or bad news? Good news. $100 million spare cash. You got chance to supply one of the biggest army in the world. Suddenly Tesla suddenly shoot up. That way, any when that shoot up out is what we call create what we call ultra movement. Ultra movement is what we call gap up or gap down. So basically, you're looking for big monster candles. In this case, you want to call it a subset of it a breakout trade also. After that, if there's a breakout trade, after there's a breakout trade, there's a opportunity either after the ultra action, next finish it after ultra scale, there is what you call the next level will be breakout trading or fit the gap trading. After that, we got day swing trading or intra-week trading. Trades open after the earnings announcement. Pang, understand what I'm saying, Christina? Vivian? Okay? Okay, good. Here's Fossil watch, you see now? This is what I call, this is what I call here, look carefully. M5, gap down. Wow, big big. Then after come here, Fossil. Sorry, this is very old slides. Fossil watch in 2014 it's very hot. Unfortunately, Fossil watch nowadays I think it's about $10 or $12 only. Hey, what's so much? Fossil watch below 20 or below 10 nowadays. Somebody check for me. You see, create what I call gap down trades. We gap down below, we enter, we hold it for X number of days, we get out. X number of hours. Same thing, gap up here. Okay, this is what I call, okay, I can't mention too much. Not fair to people. This one is a M15 candles. M5, M1, M15. We are using for this type of gapping trade. Opening bell, come out earnings report. Okay, shoot up, gapping trade. So for in the upcoming class I'm teaching now, we are looking to trade earnings using options. So if your K is $5,000 account, you can buy call, buy puts. You can long shares or short shares. Okay, use comprehensive spreads. Wherever is fixed risk budget trading. Understand? Type yes or no. Earnings trading can be open risk. Like the one I share for beating and Charles and Peter is what we call is for who now? It's for people who got open risk capacity. So people who are able to trade shares, who are comfortable in trading shares, can trade shares. Then the flexibility to trade flexibility and trading to trade is much better. Higher chance of winning money. Correct, Peter? Peter, you understand what I say lah? Understand right? Ooh, sub 10. I think 6 months ago we're looking at about 10 over dollars. I wonder can do like sell puts or not. So the more money we have, the more different. That's why, gentlemen, when I teach you strategies, it's actually for certain speaker at 5K, 10K account. If you got 50,000 or $1 million account size or half a million, then it's different ball game. A person who are trading 5, 10, 15K account size is different. Thomas, $50,000, $100,000 is nothing. Okay. So Thomas, I got 5 million, 10 million. Then fine. Talk to me privately. I got some old students who's bigger than that. And their strategies is what I call customized to their needs. After all, you cannot be doing iron condors or Okay. Okay, you can be doing. I can be doing 50,000 over iron condors, correct? $50,000 of shredders and stranglers. I can okay like that's a small side lah. But $50,000 of iron condors, I don't think it's a good idea. Okay, next. So this is a live trade. This is a trading cycle of UA optionable shares. This one is more than 10 years old. But the principles, the strategies, applications may be different, but the opportunities are the same. Earnings result come out. Okay. Post earnings, normal market, normal directional markets. So when you trade US market, no such thing as Thomas, no opportunities. Sure have one. It's only whether you want to take out opportunities. Thomas, my this best method. No, there's no such thing as best method. Remember, ladies and gentlemen, okay, as a driver, you want one car or you want to have you want to have one car better, you only have 10 car better. Peter, Charles, which one better? One car better or have 10 different cars better? Is my audio loud and clear? Nobody responds. So you understand the principle of trading now. Thomas, I'll look for the best method. You're telling me the best car. Ladies and gentlemen, the difference between a car and trade strategies. No, having a license is useless if you don't know how to drive a car. Having a license just implies you pass a theoretical. I said earlier, every strategy has got good point, the bad point. The good and bad point, one thing worse about it, the good point, bad point is subjective to every individual trader's objective and resources. After all, you got 10 cars, even better. Why? Today I want to bring my family out for a road trip to JB. Then get a big SUV, lor. Okay, today I need to pick up my billionaire friend from China. Then go and drive a BMW, go and drive a Bentley, lor, or drive a Rolls Royce, lor. Then I said, Thomas, I want to pick up my girlfriend. Okay, lor. Drive your Porsche. Thomas, I want to help my friend to move house. Then we go and drive your big van, no? Cover van, no? Remember, trading, these are all strategies. Okay. Trading strategies are active, aggressive. For us, I don't want to bend too much. After it's now very 9:37 already. Anyway, this is the upcoming class. This is the upcoming class. If there's enough interest, I will do this one. No interest, I don't mind. It's not a problem. That's why okay, gentlemen, please, if you're interested, attend the class because I do not know when the class is good. Sorry, I do not know when how long I'll be teaching. Happy to teach, I teach. So this earnings volatility class is totally different from the last one. 2014, I teach how to trade, how to sell income iron condors, earnings volatility iron condors on earnings company. This one is got both. Got income, got breakout. Okay? If there's enough interest, I'll do it. Not interested, don't mind. It's quite tiring. This one, by the way, is not a master class. This one is a practical class. If you notice, you can see the live learning. No theory. Trading setup, live practical, trade opening, second session, trade closing, debrief, trade opening. Okay, trade setup, trade live market, trade opening, closing. So basically, actually, it's hands-on practical class. Okay, this one thing good about earnings volatility, seasonal but fast and furious. Okay, now let's show you. This is the old sample. Okay, it's very old sample. Okay, I do it fast forward. This is an earning cycle on a old, very old, but it's actually valid. It's still valid today if you really want to do it that way. I got people doing it now, but they are not definitely not your beginner level, let's be honest. So this what happened is this is a pre-earning trade. Facebook $210. We are bullish short term because owing to technical analysis, etc., and the increase in option premium. So we intend to do a bullish short term bullish trades. So we got two choice. One, buy the shares, $210. Okay, buy 100 shares for $21,000. You can see this is the last earnings. Or we can buy an option. The actual share trade it's a share trade right? Nobody will do it okay. You see the share trade here You see 2018 buy a 60-day call, buy a $9.60. Thomas, why not 60 cents? Why not $5? Why don't I do a spread? The person trade is actually based on his budget. His budget is like his risk capital budget. That means what? He prepared to lose 960 or $1,000. Understand the word fixed fee trading lah. Bang? Fixed fee trading. So you can buy the shares you can buy the shares for $21,000 But in this case I don't want. Okay, what you can do? So what I do? What about budget? $1,000. So I buy $1,000. I buy at a money call. Nothing wrong. So how far can I buy a money call? Then which one is true? Then we can discuss later. 60-day cycle is not based on your directional spread trading strategy. Okay, this is not a newbie. Okay, so now I buy a trade. Which one better? $21,000 better? $21,000 better or $960 better? Vivian, Roy, come on, can be interactive now. Thank you. 2 days later, 960 now become $1,462. Make 52%. He make 52% overnight. Okay lah. Thomas, buy shares better. Shares I can make more money. Yes, I agree. The 100 shares now is worth $21,700. How I know? Yeah, you can see here, no? Buy shares at what? Buy 210 per share leh. Now at the moment the options which worth make 500% the can see the share price here now. You see a share price here? If you buy a shares, you make $800 Thomas, I make more than options excuse me. Yeah lah, of course you make more than options You put in $21,000 to make 800 Which one better? You put in $900 to make 500 or you want to put 21,000 to make 800 Okay? I'll try to explain to you later. People like Philip well trained by me already. Focus only return over risk only. What's my risk? What's my profit? Because most of you got problem. Most of you got problem because they focus on dollar rewards. I will share later, can Paul? For what? For the shares, ah? Of course, ah. I will share one more example, more powerful post earnings trade. You see, ah? Hey, wrong slides. Sorry. You see here now, my friend. Peter, you see the pattern here now. This is Facebook earnings. We enter the trade 3 days before earnings results. That trade we took profit. I'm not wrong. This, by the way, that trade is not my trade. The trade one of my student trade. Took profit. Took profit and made 550% and run. Can you see now? So Peter, in my world of trading, it's always return over risk. What's risk? What is the maximum capital put inside? It's not your stop loss, or it's not your buying power, it's not all your jazz inside. Okay? It's not your jazz inside, or not stop loss or whatever it is. It's actually your capital exposure. So, Thomas, okay? So, which are better? That's why, gentlemen, I think for all my directional students, correct? All my self-puts directional students, I got this rule, correct? 5 days before earnings, 5 days after earnings, don't touch, correct? Yes or no? Now you know why now. Look carefully. After the earnings announcement after earnings come out, hey, 3 months, 3 months, 6 months trend line cannot destroy in one earnings announcement. 3 days later, broke a 4 months low. 3 months trend, you can see a 3 months, you can see a trend line here. The trend line, one come out smash. 3 days later, 3 days, sorry. 3 days later, 3 days later, go and broke a 4 month low. You understand? So, ladies and gentlemen, now you understand why I tell you for 1,001 times, never hold your normal directional trades into earnings. Of course, if you go and do lips, fine. But normal directional trades or income earnings, wherever, bad idea. Questions? Pang? Okay, Pang, understand? Worry about this video. There's nothing wrong with it. Okay? Nothing, Thomas, I can sell the strangler. Yes, you can sell a strangler if you are prepared. Example, the way I teach Charles and things, Charles and beating, because they are able to hold shares. There's no problem holding shares. Shares means that you hold from years and multi-years. Don't worry about earnings because the earnings earnings announcement do not affect it. It's only a fundamental change in the company that will cause a problem. But if you hold a share for 5 years, you need to every 3 months, to worry about earnings announcement. No lah. Vivian, any questions? Rena? Young? Jeffrey? Mac? Fuming? Gary? One thing good about earnings is seasonal. And okay, I'll explain to you later more. Come. So done right, correct? Understand what happened, I wish Chris, what happened? Look carefully. This you can see announcement, So you can see here, wow, from $212, shit down to $164, just because of what earnings announcement, Thomas, you will go to 250. Why cannot? The big boys, excuse me, I don't, please, I hate people tell me based on what you think, what you believe, what you expect. Market don't give you a hood to you. Market don't give a damn to you because market behave what market do. You're nobody. Okay? So respect the market. Here's the trade here, you can see. Okay. After the earnings announcement, after earnings, this is post earnings. Can see here, my friend. Is it visible? This is the share trading post earnings. Post earnings. Can see it now. Ultra trading. Actually intraday. Actually based on ultra, but actually for intraday. Okay, I make money. I make money. I make very much. I make $2,000. You see this. I shot it at 176.89. I buy back at 175.41. Okay lah, make $1 and $1.48 lah. Okay lah. For day trading is acceptable. For day trading acceptable. Peter Charles, understand saying? Acceptable. Fast in, fast out. Day trading because there's no way for day scalpers Thomas, I put in $10,000, I make 50%. I put 100,000, I make 50%. There's no way for you to do that with shares and futures. I CFDs. If you base on return over capital risk. This, by the way, I teach people to be scalper. Look at this student. This is an old student of mine. Look carefully. Same day, I enter the trade. What time? I enter the trade. I sold the trade at 9:37. I hold I do 12 plus. I'm tired, so I close a bit. Can you see student? Open at 10:37, close at 1:28 a.m. in the morning. Also the same day trading. How much you buy? Can you see now? How much you take profit? So let's say, if you tell me, people, Thomas, with my trading, I make 500%, 150%, 1%, 200%. Trading shares is bullshit. Yeah, 100% return trading shares especially for day trading or intra-week trading cannot be done unless they can do what I call creative accounting. Means that my return over risk is based on my stop loss. My risk is based on stop loss. Okay, please do not use your stop loss risk, cut loss risk as your capital risk. Your capital risk is your exposure. Anybody? Jeffrey, any questions? Anybody, any questions? John, Mac? Okay, so this guy is still the person concerned, okay, specialize in scalping, day trading using options. He buy a vertical spread for $1.02, close it 3 hours later, 3 hours later, okay, for 245, and make $138. Return over risk 125%. 125%. My trade I only make 2% plus only, 3%, 2% plus only. Yeah, 1% plus with that. For which one? The options but this one is it? I repeat again. The person concerned at that moment in time. one? This one? Where got next one? How many go ahead? This one nah. This one no? I repeat again. This person at that time, moment in time, he specialized in this copper. I call him the hunter. So are you a hunter? So yes, if you're not a hunter, then you should not be doing this type of trade, okay? You still not understand? The trade was closed manually, okay? The trade was closed manually, okay? So remember, it's not 0 DT not suitable, whatever. Okay, 0 DT means that 0 days to expiry is actually intraday trading. But it's actually all methods can make money lah. All methods can kill you also lah. So which one is better for you? Okay. I said earlier, unfortunately, my earnings class do not teach you to trade all the 4 cycles. We need to teach you this actual earning cycle one. Most of that one and for what income volatility, one for a breakout volatility only. So that case study is Tesla. Upcoming class. Anybody, any questions? Anybody questions? This upcoming class. Okay, Mr. P, Mr. Philip. Philip, are you here? Let's hope we can get enough students. Okay, if you got enough students to come in for this, because you will join in. Because remember, you are tutorial practitioner level student, so you attend and you attend all my options. Every option class I can teach, you will attend. Okay now. So let's hope. Okay, let's hope we can find a few students to join us. Philip is, how to put it nicely, okay, subsidize 1 month expenses and utilities. Okay. Anyway, anybody any questions? If not, before I go, okay, for those who are public members, okay, here's my personal. Okay, like use WhatsApp me. Use this telephone number. I don't mind to have a private session with you over WhatsApp or 9 or whatever. Okay, John Mac, want to talk to me? Neil donate. Neil already to Dubai already. Rina donate. Gil, okay. Mr. Yu. You know, late today. This. You drop me a message. You're more busy than me, okay? I know. Mr. Yu is actually one of my old student, very old, learn income, then become the hunter. Since then, I discovered that he's not a good farmer. Then currently he's now specializing in hunter and scalper, hunter, scalper, trapper. Means what? She do short-term trading, intraday or intra-week trading. Okay, Jared, why don't we take a 15 minutes break? We will come back at 10:15. Then we'll take a look at Tesla and friends. Would that be good? Or everybody want to go home already? Okay, we come back at 10:15. Then we will show you how to do an instant one. Thomas, how late? Don't worry. To structure earnings trade only cost you 3 minutes only. To be fair, Jared, to do an earnings trade will in fact for those older students of mine they can do it in 1 minute to buy a breakout trade, another 1 minute to sell income volatility trade. It's an attach. Okay, done. Okay, next. Oh no. Yeah, I got minor problem. Give me a minute. Hmm. Okay, let me see how people have. I got 31 people here. Apang, Ellen, Paul. Okay, good. No new name inside. Okay, can you see my screen loud and clear? Is my audio, visual, everything clear? Now let's go to what's earnings about. You see here, this company is called as Motorola. Now it's worth $137. You can see here, ladies and gentlemen, you can see start earnings. You can see the results earning. One earnings come out, collapse. This can see the calendar here. This is what I call a very hot and very dangerous company. You see now, from what? From $1,250 drop down to 300, 300 then drop down to 225, 200. Okay, so this type earnings result is always quite can be non-event, can be event. Look here lah, it's a super event lah. You can see here, this one lah, this is non-event now. Doesn't mean, ladies and gentlemen, here become abnormal event. You can see this guy. After earnings come out, after earnings result come out, the last earnings Motorola shoot up by $28.50. Okay. So now let's go to find Apple. Somebody requested for Apple, remember? Okay, now can you see Apple lah? Apple here can see the earnings The last earnings, how much it moved? The last earnings Apple move was $8. The before that, the last earnings move how much? Check for son. Apple collapse how much? shoot up by started to go by about $6 plus. So Apple itself is volatile, not volatile? Is okay. Ah, okay. Depends on the market. So we will see this Tesla next Monday or Tuesday. Anyway, so anyway, tonight's session, Mr. A. Alvin, my old student now in Thailand, now asking me for Tesla. Tak, can you see that, gentlemen? Can you see that? Can you see a screen? One red dot and one red dot and one blue dot. The red dot is what? Conference call, is it? It's a conference call. The blue dot is actually a earnings announcement. Every company is normally got two or three one. Very often it will create abnormal price movement. Like here like that. 1 year ago, can you see now? 1 year, can you see now? After earnings result shoot up by $14, the next day go up, collapse all the way up. So that's the reason why 5 days for normal trading, for normal directional trading, 5 days, 5 days before the earnings announcement, 5 days after that we don't touch. Okay? So now to do Tesla. Our objective now is couple of things is quite simple. Okay, now let's go not here. Wait, that's not right. Tesla, if you are super bullish on Tesla now, we can do two things. One, buy a strangler. Right. Buy a strangler. Buy an money call money put. This one is best for what? This one is best if you are super bullish on Tesla or super bearish on Tesla. Okay, this one you can buy a strangler, means buy at the money call, buy at the money put. Is what we call a volatility breakout trading. Because why? For this strangler to work, Tesla must move more than $20 up or more than $20 down in order for you to have a break even plus level. Anybody any questions so far? Anybody? Peter? Vivian? Young? The best one. So Thomas, how if I sell? If you want to do selling, can. If you Thomas, I prepared to short Tesla shares at 235. No problem. Sell a strangler. Then Thomas, I prepared to buy Tesla shares at 200. This one also can be done. So basically what we call you have what we call trades. One is the 230 call and the 200 put is technically speaking is what we call income volatility trade. Okay. Anybody any questions? Alvin, what's the objective? Hello, anybody any questions? Or am I talking too fast? Until you all see I'm ready. Alan? Pang? Pang don't need. Pang get picture blur. So both are doable. Thomas, I don't want. I don't have a depends on your objective. Like earlier on just now, I was explaining to some of the most serious traders like you like that, who are prepared to long shares or short Tesla shares. Why don't you Why don't you sell out of the money strangler? If you want to do a spread trade, no problem. We can do it. This one is 235. 235. Okay, this is a spread trade 235 here. Next, the put side is 205. 205 is what? 205 is okay, that's right. 235 is still out of the money, good, still okay. Uh-huh. Sorry, gentlemen, just be careful, Please trade the whole number spread, Do not trade this way, This way is very hard to do because owing to the share split done by Tesla, causing a lot of problems to the option chain. So sometimes option chain is totally distorted. Yeah, you see you can sell a 235 strangle call, and you can sell a 205 put. That's a strangle. Cost you get about $7 plus, but your risk is huge. Ladies and gentlemen, when you sell a call without shares, the loss is infinite. Okay, infinite. Dave, you look at it later, can? So you can sell a naked strangle 230. Okay, for those into delta numbers or probability numbers, you can see. Then 235 for the call, 205 for the put. Sell a strangle, collect $7 plus, or you can sell a fixed risk spread iron condor. For this one, one thing good about the fixed trade, right, Thomas, very little money. Don't be like that. Return over risk is about 80%. If you sell a nickel call, Alvin, when you sell a nickel call, unhedged, no shares, you are equivalent to shorting shares. Shorting shares have unlimited capital risk. You can always, instead of selling a nickel strangle, you can sell a hedge strangle, iron condor. Both are okay, 80% return. Peter, Charles, Alan, okay lah. So you can buy a breakout trade also can. Thomas, I don't think I can afford to. I cannot afford to buy the strangle, to buy a money strangle. So instead buy a money strangle, why don't you can do it out the money call? But what's the problem? The problem is that buy and the money and the money iron strangle and the money iron condors, you sure win money one. That's the reason why your maximum loss is $230. Your maximum profit is $20. So a breakout trade you cannot do this way. Most of the time I suggest you just do slightly out of the money. For this case, maybe you do at what number now is 2 okay, 20 cannot 215 lah. 215, then you buy 220. Then here is sell the 215 and buy the 210. Also not very good. But this trade, see why it's not very good? It's not because the start of trade is not the probability of winning extremely high. That's the reason why you for your risk of $463, you only can make $37. So basically, the market telling you want high probability trades or high winning probability of winning, the return is going to be very small. You're talking about at the money one or out the money one? Let's say now you're bullish, Let's say now you take some. What's the budget? If the budget is there, you better buy a straight call better. Yes, if the budget if you have the budget, why don't buy the straight call? $5 spread. I think if you're bullish, I think 225 will be just nice. Uh, you're trading earnings only, or you're trading the rationality? If I trade the rationality, I will strongly suggest you can afford it. Do the 250 spread. Do the 225 spread. Sell it up to do it until 18th of November. It's only 40 cents more, but the return over risk is still more than 100%. You see now. So if you want to do big wings debit spread, do further out in time. There's no benefit to do big wing spreads. The short term. Alvin, understand saying? Anybody any questions? Charles, Christina, Peter, Philip, Vivian. Okay. Are you prepared to hold the shares? By the way, okay, then go ahead. Just now I was telling people, if you prepare to hold the shares, very simple. Sell the 200 or 3 or 150, you will prepare to hold the shares. Okay? Prepare hold shares, okay, and you buy the 223. I think go ahead, nothing wrong. You're prepared to hold. If you're bullish long, I know you're a fan of Tesla, nothing much to say about it. Okay. Then you make sure you buy a long dated your long call your long call must be long dated okay, don't use short term there's no benefit. Okay, ladies and gentlemen, what I'm teaching him now is a modified variation of a strangler. Okay, if you got a budget, okay lo. So gentlemen, for the public members who know what the hell is going on, okay, for the on Alvin is a trader who follow me coming to 12 years already. Okay, I met him for 2010. He was helping me in 2010 at the Traders Investor Expo things like that. Now, 13 years. Now, anyway, so he's coming here now to ask questions. So, ladies and gentlemen, this is not a selling preview session. This is a real life session. He is now going to thinking of how to going to suggest it either he's coming here for alternative views. So if you are doing it, do me a favor, Christina. Must be around this price. Do not overpay for it. Gentlemen, this type of trade is quite decent. 250 normal make very little money. You make 100% return. This type of trading is known as fixed risk trading. What our friend is what Alvin is doing is even more powerful. I show to you. You're selling what? You're selling a 200 put here. This trade is what I call a buy sell strangler. He's selling a 200 put. So the trade is structured separately. Technically, structurally, it is a diagonal, but you can't do it as a diagonal because diagonal is either all buy or all sell. But what I can do is just simply sell the put. He sell the put. I'll show you. He sell the 200 put. Means prepare to buy a share as 200. Then he long on the what? How long call? 3 months. I don't. Your budget may not be there, my friend. $2,000 may not be enough. My apologies. Got hijacked by him, but I don't mind. Yeah, he are going to pay $2,300 for a trade Okay it's okay. Nothing wrong with it. It's bullish. Okay, but he don't have no problem holding Tesla at 200. Your budget may not be enough, my friend. 90 January series already, and the money is already 290 already. $29. Okay, that's any enough. Don't talk much, right? Okay, anybody, any questions regarding without I don't want to talk too much about heavy capital expenses. This is not going to be a good idea. So we can sell a strangler lah, can. Can we buy lah? Can. It's actually literally up to you. Depends on your budget. I think for you, if you your strike price more important or time more important, then if your time is more important, then you can see for your 4 months, see how far you need to sell to meet your budget. Have you understand so far? Ah. So it's actually instead of focusing on the strike price, focusing on your budget. Okay? Mm. Then please, but you know my rules, you cannot sell below the DX, okay? Mm. Okay, anybody questions about Tesla? Sorry. My apologize if the rest of you get lost. Okay, no more if Edwin. Anybody any questions? Step up. Then let me take a look at next week's. Next week's. Let me do recording. Next week's is interesting company earnings again. So next week's unfortunately chart pattern wise cannot be very good for him this year. Tesla even worse. Tesla have been all time low. You can see here, Thomas can see the chart pattern here. This is the 1 year chart patterns. Next week 1 year high is $700. Okay, 6 months ago hit the low of 162. Now is drifting sideways within a congestion. So Thomas, you got so very nice. Of course, I've been trading Tesla how many years already? And Tesla is one company, must be careful. Last earnings, Tesla is non-event. Thomas, what I mean non-event? Can see Tesla April earnings have a gap down have a gap down $106 there. Then the Tesla earnings no next week earnings for January have a gap down of 128 also there. So the previous earnings gap the move up only moved $13 or $14 only. So Dave, you're buying or selling? You're buying or selling next week? Buy or sell? Are you doing for income volatility or breakout volatility? Ooh, okay. Should be fun. Let's say you want to sell. Gentlemen, we can sell a strangler. Instead of selling a strangler, I will teach you how to sell a H strangler, iron condor. Why I teach iron condor? Why don't you sell a strangler? Strangler is perfectly valid, like I explained earlier, to sell silver, but not many people who are prepared to hold the shares or short the shares. One thing good, gentlemen, for this trade is that the trade here we can do it for 250. So, gentlemen, this trade is why we do this method, not because strangler is bad. Strangler is excellent, but we do this trade because most people do not have the budget to go and trade a strangler, a $245 company strangler. Okay, this trade is valid. This is far out of the money trade. You collected about 105, 110. I think should be quite suitable around there. 105, 110. Okay, this is income volatile trade means that as long as I mean by Okay, I know money not okay. It's like German. It's not the return over. It's not the $1 problem. Ladies and gentlemen, we the good traders always focus is what is our capital. What is the worst case scenario? Our maximum profit is 107. Our maximum total loss is 145, 143. So my return over risk for this trade is happen to be 78, 75%. 75%, 75% for 5 days okay now. 75% return for 5 days okay now. Okay, for those people, Thomas, I prepared to buy the share, short the shares, then no problem. Then you can sell. You can sell this trade, same strike price. And what's here? Sell a strangle. So which one is better? We can discuss it on actual class itself. Strangle is better, or iron condor better, or some or combo buy debit butterfly is better. We can discuss it later on. But primary reason, most important is what is the budget. Okay, which one better? It's up to you. Anybody any questions? These are two straight out. Thomas, I want to buy a breakout. Fine, no problem. You can buy a strangle. Cost you how much? Look at the price. Okay, 250 correct. 250 is correct here. The strangle, you can see the price, $23. So, ladies and gentlemen, what is market telling you? The market telling you that company expect to blow up, but you cannot afford to play this game up. Right here, in this case of buying a strangle, why don't you buy a hedge spread iron condor times 220? So, gentlemen, you notice it's not a strategy good or bad. It's what is your objective? What is your budget? If you have budget, I say nothing wrong with it. You go ahead, go do with it. If you know what to do. But if you don't have a budget, I can do trade now. This trade is good idea, bad now. This is what 250, 250. So you can make how much? You can make 90 cents. You can make 85 cents for the trade. But a trade of winning is according to option premium, is high probabilities. Sorry, wrong word. Is good chance of making high probabilities objective to market. Anybody any questions regarding this about the what? So you either buy a strangle or sell a strangle, or use in this case instead of buying a strangle, you can buy an iron condor or sell an iron condor. It's almost the same. Only one of them is the short call short put is unhedged for maximum profit. The end of the day is it depends on your objective and your budget. Okay. Hello, anybody questions? Vivian, Roy, Peter. Right? This earnings, this one I focus on actual earning trade. Thomas, why don't cover everything? Cannot lah. There's no way to cover everything. Okay? Okay. My practitioner class is 6 sessions there. Just for one strategy, one buy and one sell strategy. Then you want to cover everything can Okay, join my ultra class, join my tutorial practitioner option class 1 year program Then from there we then you got time to slowly learn Peter, Paul, Alan. Hello. Why suddenly everybody sleeping? Is it? Or everybody falling asleep now? Public members? Public guest. Dave, anything okay lah? So if I were you, depends lah. You want to sell also can. Remember, when you buy, you must buy near. You buy nearer, near money. When you sell far out the money. Okay. Anybody questions? Okay, if not, let's jam any session tonight. Wait. Any public members? Charles and Peter. Peter, any questions? Okay, if not, let's end it tonight. I'm getting out of breath again. So if Peter want to know the actual way of trading, I suggest you, Peter, talk to me privately. We have a private session because your needs is different from the rest. Same thing for Charles also. Okay. Meeting also same. Talk to me if you really want to expand your to maximize your trading capital usage. Okay, if not, gentlemen, let's end it tonight.